Welcome back, Lana. Welcome to another episode of the Bull Room. We have a good one for you today. Make sure you're liking, sharing, and most importantly, subscribing as we're trying to reach 2,000 subscribers. And also check out LatinWealthClub.com where I post articles on politics and finance. You can sign up for our newsletter today. Also, if you go in the description, you can see a link to our Discord. We have about 46 and 47 members of like-minded Latinos. And you don't have to be Latino to join. You can always just join. Shout out Joey, our only Australian friend out there. We're just there talking about fitness, talking about building wealth, stocks, crypto, and sometimes we talk about mental health. It's just a discussion. You could go on there, talk shit. Just talk. If you want to just talk about a subject, someone's gonna answer. Right. And also, I want to make it known that Kevin from Certified Taxes is in there. So if you have any tax questions and, you're a U.S. citizen, you could always mention him and he could always get back to you. And also, tax season is coming up. You could always book an appointment with him also. Shout out to Kevin. That's a free promo for my boy. But with that being said, this is your host, MP, and Behind the Scenes.
AZ.
And how are you doing, AZ?
Good, man. How about you?
Good. I want to talk about, bro, I want to talk about something that we haven't talked about in a while. And it's very important for people to know, people to learn in 2025. And that's dividend investing. You and I both are dividend investors, or were dividend investors. Right now I'm in crypto. Are you still a dividend investor, or you just you pulled down and went into crypto like me?
Yeah.
Yeah, you had to.
Sadly, yeah.
Now, when it comes to dividend investing, it's a good way to start for beginners that want to get their feet wet. But it's also good for crypto investors that are about to make a bunch of money, and instead of putting maybe that money in real estate, instead of maybe putting that money in a CD, put it in dividend investing and earn an annual return plus the appreciation of the stock or company. You know what I'm saying? So let's talk about what dividend investing even is. Dividend investing is investing in companies' stocks that pay you a dividend from their profits, from their quarterly profits, yearly profits, or even monthly profits. Just depends on how that dividend stock or company is structured, right? Something I want to tell you about dividend investing is just like real estate, right? You buy a property, rent it out, and you collect cash flow from, the cost to profit, difference. It's the same exact thing. The only difference here is that you have liquidation. With real estate, if you wanted to pull all your money out, you have to sell the house. That might take 3 to 6 months. And with dividend investing, you're earning cash flow. And if you really need to pull that money out, you can pull it out in a day or two. That's the beauty about dividend investing, is that it's liquidation, right? If you like liquidation, dividend investing is going to be the perfect thing for you. Now, let's get into what a dividend king and a dividend aristocrat are. A dividend king is a dividend stock or company that's been increasing their dividend payment, their payout, for over 50 years. So these companies for 50 years have been growing their dividend payment. Every year they're pretty much giving you a raise. You're pretty much going to be combating inflation, plus whatever their stock goes up, right? The value of the stock. And a dividend aristocrat is the same exact thing, but they've been doing it for 25 years. So, it's just the fact that they've been doing consistently and they've earned those titles because, they've been doing it consistently and increasing it. Like, they've never decreased it. They've always just, this year we're going to increase it. This year we're going to increase it. This year we're going to increase it. But they've been doing it for either 50 or 25 years. Right. Now, I want to talk about, aiming for that 8% yearly return. And why 8% is my target? Because 8% is the average yearly cash flow return for real estate. So if we could try to go for the same target as real estate, instead of investing in real estate, we could do that with dividend investing, right? So the best thing to do would just make a goal and do your research, right? And also turn on DRIP, right? What is DRIP, right? DRIP. Dividend Reinvestment Plan. So every time you get paid a dividend, it's always going to be reinvesting, buying more shares, more of that stock, of that company, and allowing you to collect more of a dividend payment every time, it gets paid out, either quarterly, either monthly or yearly, right? So if you focus on, going for that 8% return and then turning on drip, it's just going to be like, planting a tree and it raining and getting sun. It's going to grow by itself. Now, how do you even build a portfolio, right? I would say you always want to start with Dividend Kings and Aristocrats, and then you want to look for high yield stocks, right? Some, high yield ETFs, high yield companies, but the ETFs are probably going to be the best ones because what is the ETF? ETF is a basket of stocks. Instead of investing in a single company, you're going to invest in an ETF that holds maybe 50 to even 500 different companies. Like the S&P 500, it's called the S&P 500 because they hold 500 companies, right? That's a basket of stocks that will literally, just by buying that ETF, you're already diversifying in 500 different companies, right? Now, some ETFs to consider would be the Vanguard High Dividend Yield, VYM, and the Charles Schwab U.S. Dividend Equity ETF, SCHD. These are the ones that are like higher yields for that 8% return, right? That's the target. But if you can't get that 8% return, it's always good to go for 5 to 6%. That's always a good rule of thumb to take. And I just want to give you a list of Dividend Kings and Aristocrats, right? So for my top Dividend Kings, it's going to be Coca-Cola, ticker symbol KO, Procter & Gamble, ticker symbol PG, Johnson & Johnson, ticker symbol JNJ, Lowe's, ticker symbol LOW, and then we have 3M, ticker symbol MMM. You have something to say, Izzy?
Yeah, I don't think we talked about what it is a dividend aristocrat.
Oh, it's been increasing its dividend for 25 years. I did cover that.
Oh, I thought that was the the other one is 50 years.
50 years. Gotcha. Dividend Kings is 50 years. Good thing you asked, though, because people might be getting confused on that, bro. Yeah. And then I want to go for my top 5 dividend aristocrats. AbbVie, ticker symbol ABBV. Back when I was 21, when I first made my first quarter meal, that stock made me so much money. I just wanted to make that, man. I will forever be grateful with AbbVie because they had during that time they had a partnership or they got bought out or something like that, and dude, it just ran up. It ran up and it made me a lot of money. Realty Income, ticker symbol O. Ooh, that was one of my favorites. It's instead of directly investing into real estate, if you want to be indirectly into real estate, you want to talk about REITs. It's real estate investment trust, and Realty Income is the number one REIT in all the stock market, man. Do your research on that. Again, take what I say with a grain of salt and do your own research. None of this is financial advice, so take risk at your own risk. And then we're going to talk about PepsiCo, right? Coke is a dividend king, but Pepsi is a dividend aristocrat. Ticker symbol PEP. And then another dividend aristocrat that I love, McDonald's. Ticker symbol MCD. As much as I can't eat McDonald's, even though sometimes I'll treat myself to a chicken sandwich just because I love those chicken sandwiches. I grew up poor, so the chicken sandwiches to me were a luxury. But yeah, shout out to McDonald's, a great dividend aristocrat to invest in my personal opinion. And then the fifth one is going to be Chevron, ticker symbol CVX. These dividend aristocrats are in my list because I don't see them going out of business. I don't, bro. And the same thing with the dividend kings, bro. I don't see them going out of business. Again, what you want to focus on is quality over quantity. Don't go for a dividend stock or company that's paying 10 to 15%, because yes, they could be paying 10 to 15%, but next year they could be paying 2 to 5%. You know what I'm saying? That's why I'm telling you to focus on the dividend kings and aristocrats. Again, not financial advice. Take what I say with a grain of salt and do your own research on those things, and you'll see what I'm talking about exactly, right? And I really want to talk about that 8% yearly return, because now you're saying, well, MP, if those dividend kings and aristocrats aren't paying me a 8% return, do you even have a list of ones that could potentially pay me that? And I actually did some research, and I found some high yield. We're going to be talking about the 4 to 5% range first. We're going to be talking about Verizon, ticker symbol VZ. Arturo Group, they literally sell cigarettes and stuff like that, alcohol.
Altria
Group. Yeah, Altria Group. They're really good dividend stock too. It's not a I'm not sure if it's a Dividend King or Aristocrat. Is it?
Aristocrat, I think.
Yeah. Okay. Ticker symbol MO. Those are going to be paying between 4 to 5%. And then let's not forget Verizon's competition, AT&T, ticker symbol T. 4 to 5% right there. That's a good high dividend yield. And these companies, again, I don't see going out of business. Not in the next 25 years or 50 years. Now, for dividend growth, right, we're talking about 5 to 7% return. We're going to talk about Visa, right? Ticker symbol V. Microsoft, ticker symbol MSFT. And then Starbucks, ticker symbol SBooks. These ones are paying 5 to 7%. And again, they made my list because I do not see them going out of business. These are dividend companies you want to invest in. Now talking about ETFs with a blend of yield and growth, we're going to be talking about the Vanguard High Dividend Yield ETF, ticker symbol VYM. And then again, like I mentioned before, the Charles Schwab US Dividend Equity ETF, SCHD. Yeah, I said that right. I just little tongue twister there. But these ones are a blend of yield and growth, while the other ones are, like I said, Verizon, Altro Group, and AT&T are mainly for high yield. And then Visa, Microsoft, and Starbucks are mainly for growth, right? So, if you want to get into dividend investing, again, this is just like a little intro. Take it as a grain of salt and do your own research. Mi gente, like this is what it takes to become rich. If you don't feel comfortable maybe into getting into crypto and you want to start with something that's a little bit more on the safer side, not too volatile, get into dividend investing. That is the best way to start to get into investing, and it's safer. It's a lot safer than crypto. It's a lot safer than options and stuff like that. If you want to keep your money like in a savings account, but it's getting good returns and it's growing in equity, dividend investing is the way to go, guys. But with that being said, all money in, no money out. Stay dedicated, stay motivated, and we'll see you on the next one on the Wealth Club. Don't be a little bitch.